Imagine owning stocks that pay you, not just once, but quarter after quarter, year after year. That's the power of dividend stocks explained. They create passive income and build wealth while you sleep. And today, we're breaking down the latest picks from one of the most trusted names in investment research, Morningstar. According to Morningstar Financial, they've just released their list of the 5 best dividend stocks for 2025. But are these stocks really worth your money? In this video, we'll dive into their picks, analyze their dividend yields, growth rates, and whether they're truly undervalued stocks. And I'll tell you which ones I'd buy and which ones I'd avoid. So, how does Morningstar pick the best dividend stocks to buy now? First, they look for durable dividends, companies with a proven history of paying and growing dividends, even in tough times. Second, they focus on undervalued stocks, because buying low and holding great companies is how you build wealth. Third, they prioritize companies with economic moats, strong competitive advantages that help them dominate their industries and sustain their dividends over time. And here's why their strategy matters. Morningstar stock indices are known for their reliability. Specifically, Morningstar's Dividend Yield Focus Index, which tracks high-quality dividend stocks, has delivered solid returns for over a decade. In 2024, the index returned 14.21%, outperforming many benchmarks. But here's the real kicker. During the 2022 bear market, when the S&P 500 plunged by 20%, this index gained 7%. That's the power of resilient dividend stocks to buy. They protect your portfolio when the market crashes. Stay with me, because in the next section, we'll break down Morningstar's best dividend stocks list, show you which stocks are truly undervalued, and explain why these could be some of the best dividend stocks to buy now for 2025 and beyond. 5. Chevron, CVX. Chevron Corporation, CVX, is a popular choice for long-term investors, known for its strong performance and reliable dividends. Let's dive into a detailed Chevron stock analysis to see if it deserves a place in your portfolio. Currently, the stock is trading at $155.34 per share, offering a forward annual dividend of $6.84 per share, which reflects a Chevron stock dividend yield of 4.4%. With a market capitalization of $272.622 billion, a P/E ratio of 15.98, and an EPS TTM of 9.72, Chevron demonstrates solid financial strength. Over the last 5 years, Chevron has delivered a dividend compound annual growth rate of 6.49%, supported by consistent earnings growth. The payout ratio stands at 70.4%, indicating a stable and sustainable dividend policy. Now, is Chevron stock a buy for long-term investors? Let's break down the investment potential. With an initial investment of $100,000, purchasing approximately 644 shares, and assuming an annual stock price growth rate of 8%, here's the potential growth. After 10 years, investment value grows to approximately $215,892 with annual dividend income of $8,266. After 20 years, investment reaches about $466,096 with annual dividends of $15,517. After 30 years, investment grows to approximately $1,005,776 with annual dividends hitting $29,136. Looking at the Chevron stock forecast, the combination of capital appreciation and increasing dividend payouts highlights Chevron's value as a core long-term holding. For dividend-focused investors seeking steady growth and reliable returns, Chevron stands out as a solid pick in any portfolio. 4. ExxonMobil, XOM. ExxonMobil, XOM, has been a cornerstone in the energy sector, and a closer look at the ExxonMobil stock analysis shows why. The stock is currently trading at $108.24 per share, with a forward annual dividend of $3.96 per share, reflecting a 3.66% dividend yield. ExxonMobil, listed on the ExxonMobil Stock Exchange, holds a market capitalization of $471.178 billion, with a P/E ratio of 13.81 and an EPS TTM of 7.84. Over the past 5 years, the ExxonMobil stock history reveals a 78.47% increase in stock price, while maintaining a dividend CAGR of 2.61%. With a payout ratio of approximately 50.5%, the company shows a stable approach between dividends and reinvestment. An initial $100,000 investment buying approximately 924 shares demonstrates the power of compounding. Assuming a 12% annual growth rate in price, the ExxonMobil stock forecast projects significant appreciation. After 10 years, investment reaches approximately $310,585, with annual dividend income of $4,726. After 20 years, investment grows to about $964,629, with annual dividends of $6,106. After 30 years, investment hits approximately $2,995,992, with annual dividends of $7,889. With strong fundamentals and a proven dividend history, ExxonMobil stands as a reliable pick for both income investors and those seeking capital growth. 3. Medtronic, MDT. Medtronic plc, MDT, is a leading name in the medical devices industry, and a closer look at the Medtronic stock analysis highlights why it appeals to dividend-focused investors. The current Medtronic stock price stands at $92.81 per share, offering a forward annual dividend of $2.80 per share, which results in a 3.02% dividend yield. The company holds a market capitalization of $119.909 billion, with a P/E ratio of 28.38 and an EPS TTM of 3.27. Over the past year, Medtronic's stock price has increased by 10.91%, showcasing steady growth. Additionally, the 5-year dividend CAGR of 7.1% highlights consistent Medtronic stock dividend growth. With a payout ratio of approximately 85.6%, Medtronic returns a significant portion of earnings to shareholders. Now, let's break down the long-term potential. With an initial $100,000 investment, purchasing approximately 1,078 shares, and assuming a 6% annual growth rate, here's the Medtronic stock prediction for growth. After 10 years, the investment grows to approximately $179,085, with annual dividend income of $5,973. After 20 years, investment reaches around $320,714, with annual dividends of $11,822. After 30 years, the investment hits approximately $574,349, with annual dividends reaching $23,392. With its stable dividend growth and promising stock prediction, Medtronic stands out as a strong long-term pick for income-focused investors. Second, Schlumberger SLB. Schlumberger Limited SLB remains a notable player in the oilfield services industry, and a closer look at the Schlumberger stock analysis shows why it appeals to long-term investors. Currently, the stock trades at $41.75 per share, with a forward annual dividend of $1.14 per share, resulting in a 2.73% dividend yield, highlighting its strong dividend growth. The company has a market capitalization of $58.485 billion, a P/E ratio of 13.42, and an EPS TTM of 3.11. A glance at the Schlumberger stock chart reveals a 21.30% increase in stock price over the past 5 years, marking consistent performance in the stock market. Additionally, the company's 3-year dividend CAGR of 30.06% signals rapid dividend recovery and growth, while the payout ratio of approximately 36.66% suggests a sustainable approach to earnings distribution. An initial $100,000 investment, purchasing approximately 2,395 shares, projects impressive growth under the Schlumberger stock forecast, assuming a 6% annual stock price growth rate. After 10 years, investment reaches approximately $179,085, with annual dividends of about $6,728. After 20 years, investment grows to around $320,714, with annual dividends of approximately $12,480. After 30 years, investment appreciates to approximately $574,349, with annual dividends reaching $23,162. This Schlumberger stock review underscores how its strong fundamentals, low payout ratio, and dividend growth potential position it as a solid pick for investors seeking both stock value and passive income from the energy sector. 1. General Mills, GIS. General Mills, Inc., GIS, remains a reliable choice for dividend investors, and a detailed General Mills stock analysis highlights its long-term value. The current General Mills stock price is $58.84 per share, offering a forward annual dividend of $2.40 per share, resulting in a 4.08% dividend yield. With a market capitalization of $32.434 billion, a P/E ratio of 12.79, and an EPS, TTM, of 4.60, General Mills maintains solid financial strength. A glance at the General Mills stock chart over the past 5 years shows a 10.37% increase in stock price, marking steady growth in the company's performance. Additionally, a 5-year dividend compound annual growth rate of 4.13% highlights consistent dividend growth. With a payout ratio of approximately 52.17%, General Mills balances rewarding shareholders while retaining earnings for future growth. With an initial $100,000 investment, purchasing approximately 1,699 shares and assuming a 9% annual stock price growth rate, here's how the investment compounds. After 10 years, investment reaches approximately $236,736, with annual dividends of about $6,080. After 20 years, investment grows to approximately $561,749, with annual dividends of about $9,070. After 30 years, investment appreciates to approximately $1,332,831, with annual dividends reaching about $13,540. A look into stock history reflects consistent returns for long-term shareholders, making it a strong contender for those evaluating whether General Mills stock buy is a good decision for their portfolio. So there you have it. We've broken down Morningstar's top 5 dividend stocks, analyzed their numbers, and projected their long-term growth. But remember, it's not just about chasing the highest yield, it's about dividend stocks explained through durability, growth potential, and spotting undervalued stocks. But here's the real question. Which of these stocks would you bet on for the next decade? Would you choose the high payouts from the best dividend stocks to buy now, or lean towards steady compounders with growth potential from the best dividend stocks list? Let me know in the comments. And hey, if you're serious about building a powerful dividend portfolio, you'll want to stay updated with real data, Morningstar financial insights, earnings estimates, and dividend growth trends. Tracking Morningstar stock updates and keeping an eye on top dividend stocks to buy will help you stay ahead. If you got value from this breakdown, smash that like button so more investors can see it. And if you're new here, subscribe for weekly deep dives on the best dividend stocks 2025 that can power your portfolio. Because here's the truth, wealth isn't built overnight, but through smart investments and compound growth over time. Start building yours, one dividend at a time. See you in the next video. Let's grow together.